Hello and welcome to Gold and Silver Assets. It's Sunday, the 9th of May 2021. We often hear how silver is undervalued, but just how cheap is silver right now? When people discuss the cost of something, there are a variety of choice phrases that are used. It's cheap as chips. By the way, just as a translation, chips in the UK means the same as fries in USA. They also say, oh, it's dirt cheap, or I got it for a song, or I got it at bargain bucket prices. And when something is considered expensive, then you might hear people say things like, oh, it cost an arm and a leg, or I had to pay through the nose for that. Now, apparently, that phrase actually has Irish origins when the census was taken by counting noses, and exorbitant taxes were therefore imposed on each nose. Sometimes some people say, oh, it was daylight robbery, or it's going to break the bank if I buy that. So when we're looking at the markets, it's far more important to look at value rather than price. They are not at all the same thing. Two stocks might have the same price, but completely different values. And so our aim is to hunt down those things that are undervalued. When it comes to individual companies, you can look at various metrics like assets, revenue, etc. But how do you value commodities? Now, this is a price chart of silver, and this is on a log scale, and it goes all the way back to 1803. Now, when we look at the silver price currently, it doesn't look particularly cheap up here, does it? But remember that this chart covers a long history, and it doesn't account for the depreciation of the US dollar. So let's take a closer look at that. This is actually an amazing chart that goes back to 1344. Wow. And this shows the price of silver when adjusted for inflation in 1998 US dollars. So you can see that the silver price has been dropping for centuries, and it actually reached a historically low price in the 1990s here. Now, this chart only goes up to around 2012, so where are we now in terms of inflation-adjusted silver price? So this chart shows the silver price on a log scale adjusted to the official CPI. And right now, silver price here is actually about 1/5 of the price it was at the 1980 peak. Now, of course, we all know that the official CPI is most likely understated, so this chart probably isn't particularly accurate either. What about if we use the shadow stats figures? Now, I couldn't actually get this on a log scale. This is actually a chart provided by goldsilver.com. But according to this, the silver price is currently 1/27th of the price that it was at the 1980 peak. That seems pretty cheap to me. Now, instead of using fiat currency to value silver, let's try using various different ratios so that we can look at this thing at multiple different angles. So this chart shows silver priced in terms of personal income in the USA, and this dates back to 1960. And according to this, silver was the cheapest it has been in history in around 2002. Where is it now? Well, it's over here, which is still, still pretty cheap, I'd say, historically speaking. I mean, it's still cheaper than it was in 1972. How about if we price silver in terms of gold? Well, silver in this case was historically cheap last year. And even now, it's still pretty cheap on a historical perspective. What about if we price silver in terms of the US GDP? According to this, again, silver was historically cheap in 2002. And again, historically speaking, still looks reasonably cheap over here. Here we have silver priced in terms of M2 money supply per capita. And yet again, 2002, that date keeps coming up quite a bit, doesn't it? That again was a historically cheap price for silver. And where are we now? We're still here. So again, that's still historically reasonably priced there. This is silver priced in terms of the US public debt. Now, before anyone says anything, yes, this is on a log scale, believe it or not. All the charts I've shown here are on the log scale. The ones that I've created are anyway. And yeah, this is on a log scale, which makes this all the more astounding. Silver is mega, mega, mega cheap, according to this metric. Crazy cheap. Here we have silver in terms of the S&P 500. And look at here, 2001. We saw bargain bucket prices for silver then. And even now, silver looks pretty cheap in relation to the stock market. And how about if we price silver in terms of house prices? So at the moment we're up, kind of up. This only goes up to 2020, so I haven't got the most up-to-date value for this. But over here is where we are now, roughly, I'd say. And the historically low prices for silver in terms of house prices were over here, which is around 2001. So by this metric, silver actually does look a little bit more expensive. Okay, let's put this all together. And I think we can safely say that silver reached historically cheap levels by pretty much all the metrics we've looked at. Back in 2002, that was the time to really be piling in on silver. Now, also by the majority of metrics that we've looked at, silver still does look reasonably cheap. Now, just because it's cheap, it doesn't mean that price is going to skyrocket in the next week or even in the next month, right? This is a highly volatile asset, and it does take time for price movements to actually play out, and there are lots of ups and downs on the way. And so this isn't suitable for whiners. Now look, YouTube didn't actually exist back in 2002, but I'm pretty sure there would have been a ton of whiners in the comments back then about the silver price. No, when it comes to silver, this is an asset that tends to reward those who are patient. Next up, the market update. Let's start with silver priced in US dollars on the daily scale. And silver's doing pretty nicely. I'm pretty happy with this price action. And we had a nice move up. I'm expecting this to hit 30 in the next week, maybe 2, I don't know. That's one thing actually. I don't know how to work out timescales. I guess nobody really does, but does anyone have any technical analysis techniques that take into account the time dimension? I've been kind of playing around with fib circles, but yeah, I haven't really tested them out very much. But yeah, does anyone know any good techniques for that aspect of things? Anyway, getting back to silver, yeah. So I think it's going to hit 30 again, but I don't think it's going to shoot through there. I think we're going to get a knockback, and I think it's going to be a sharp knockback. So as I said, I think we're going to go up through this 28. It may kind of stop here briefly, but I think we're going to go through here and get up to here. But this is where problems going to occur. And when if we get knocked back, which I think we will, I think it's likely to either find support here, but actually more likely, because, you know, these knockbacks can be harsh when we're talking about silver, I think it could well come back down to around 27-ish. And that's going to upset a lot of people. But I actually think that that could be the kind of last shakeout before the next big move. And I think it's going to turn up from here. And the next time we approach this 30 level, I think there's a lot of potential for it to break through there. So yeah, I'm looking at bullishness for silver. And yeah, so this pattern seems to be playing out as we suspected it may. But let's see what happens. Okay, gold's doing nicely as well. We're still in this channel. Now, we did have someone say that we need to discount this bit up here. And yeah, we could do that, in which case you'd kind of draw a line going through, touching this trend line here, in which case looks like we've had a breakout there as well. But look, there are some people who are going to be much more conservative. So either way, I think we're going to break through this and come back up, you know, to reach all-time highs again. I'm not bearish on gold at all. But yeah, for some people, they're going to need that reassurance. And so the question is, were people reassured when we broke through here or through here? So the more conservative people would want to see a breakthrough above about 1860, I'd say. Where we are now, I think we might pause a little bit because we've got all this price action here that's going to affect it. So I think over here we are going to get a little bit of a break before we break up through there. So what would I say about where we are now? So yeah, don't stop here, keep going. Good. Anyway, gold's doing pretty nicely. I'm pretty happy with that. One poor soul last week was talking about $35 gold. Oh dear. Anyway, I think you only need to visit places like Russia, China and India and the Middle East to see why that is highly unlikely to occur. Okay, now what I wanted to do here was take a look back at some of the kind of techniques that we tried out recently. And remember that I like to try things out prospectively. Looking retrospectively hides a lot of things and you don't get the whole picture really. Whereas when you look prospectively, it allows you to see the flaws in your analysis in terms of the technique anyway. So one of them was looking at the correlation between gold price and silver price. So the red area here shows the correlation coefficient between the gold price and the silver price. So if it's positive, which most of the time it is, and in fact it's strongly positive, 1 is kind of the maximum you can get, and most of the time it is around that level. But as we've seen, there are occasions when gold and silver move in opposite directions, and so you get a negative correlation. So this happened back here. So basically we've had kind of 4 times now where that's happened, and this is the one here where we were looking at it prospectively. And what can we learn from this? So one of the things that happened was that what we're looking for is the correlation goes negative and then it becomes positive, and it's that crossover that we're looking for. And one of the things that happened was here. So the crossover happened just over here, and then price dropped afterwards. And so, and that actually happened at each of these times as well, but not to such an extent. So you can see here, price dropped a bit before shooting up. And over here, price dropped a bit before shooting up. And the same here. But these were much smaller drops. And so I kind of assumed that this will be a similarly small drop. And, you know, I was thinking maybe it would turn around over here before moving up. But actually we've got a substantial drop there. But then if we look back at this as well, you'll notice that there's 2 aspects to this. So one is the strength of that negative correlation. So this was the most negative out of all of these. But the other thing is the duration. So these were all pretty short-lived, and this was the longest of them all. So I'm wondering whether when you look at this, the longer the duration and the more negative the correlation, the greater the drop you can expect before the turnaround. Now, I don't know if that's the case, so that's something that I'm going to be looking at in a prospective manner, and we'll kind of test that out in future. But I think it will be a while before we get back to something like that. But that's the other point I want to make, is that I don't use any one technique all the time, because I don't think anything works all the time. And there are some techniques that work in certain situations only. So, for example, in this one, looking at the correlation when it's up here doesn't really tell you very much. It's only when you get something like this where you get some kind of signal. But yeah, I thought that was interesting, and that's a potentially useful thing to look at. The other thing that I wanted to look at was that predictive curve. So this was drawn previously, and we'd basically done this regression kind of fit. So this is a second order polynomial curve, and it's basically fitting the extreme lows on the monthly basis for the gold price. And so we see that we got a reasonable fit, and I'd only fitted points up to here. I can't remember what date that was. Now, what this predicted at the time was that the price for the March low would be 16.91. I think the actual March low ended up being about $15 lower than that. So that's not bad. Of course, we are working on the assumption that that was a bottom and that we're going to go up from here. But so far, it seems to be okay. So the way we deal with this now is add that as a data point and then redo the regression. And I've done that, and actually we get an even better fit. I think it comes to 0.98 for the next one. The problem with this is that I've managed to get it done on Excel, but ideally we want to get it done on TradingView. And so I'm kind of trying to find a way, because I don't know how to code. And for TradingView, you need to be able to code on PineScript. So if anyone knows how to code on PineScript, all we need to do is plug an equation in there and we can get that done. I'm just not very good with coding at all. But yeah, so far this is looking potentially useful as well. Let's move on to the gold miners. So this is the GDX on the daily scale, and again looking good. We're in an uptrend, and yep, look, we've got higher lows, higher highs, and I think we're on our way to around 40. I think we might get a bit of a knockback there for two reasons. One is we've got all this kind of price action over here, and the other thing is if you look back to 2012, also that was a kind of an important support and resistance line there as well. So I think we're going to make our way up to that in the coming weeks. But overall, I think we've got some much higher targets ahead. It's just not going to go straight there. We're going to zigzag up and down on the way there. And moving on to the silver juniors, again looking good. We had a bit of a scare over here, didn't we? It kind of tried to fill that gap, but look, the buyers just jumped right in. We got on this massive lower wick over here, and price just bolted upwards. And we actually got past this level here, which I was concerned about, because price just never really managed to stay above there for long. Where are we going from here? This is the big one here, 1750. That's what we really want to break through. I don't think we're going to go straight through there, but you never know. I think there's two possibilities here. I think, first of all, I think this is going to act as support now at 16. And either we're going to go up here and get knocked back down to 16 again. And I think that's going to act as support this time before moving upwards. The other possibility is that we actually go through here and then back test that trend line at 1750 there before moving upwards. So it just depends on the strength. Certainly if silver's does as well as I think it might do, then this second possibility might be the most likely one. I don't know. But look, I'm still bullish on this. And looking at a lot of the silver miners, some of them are really winding up for a big move. So I think this is all looking rather promising. And so that's it from me for this week. I just wanted to thank some of the really lovely comments that I get. Look, I do chew up a lot of hours doing this, but I really enjoy it as well. I'm a bit obsessed, but it's really nice to know that people appreciate the time and effort that I do put into this, and I hope you all are profiting from it as well. Anyway, that's it from me. All the best, and see you next week. Bye.